Welcome, ladies and gentlemen, to our session today, Enhancing Financial Service Providers and MSMEs Resilience Through Climate Strategies. We have, as you see, we are many people today, many speakers, wonderful panelists that where we will have live or interactive and lively conversation on what have been we doing in terms of climate risk assessments, climate strategy, focusing on the motivations, on what comes next, how we'll be upscale or looking forward in order that we invite more FSPs to develop their climate resilient strategies. I'm your moderator today, Natalia Realpe Carrillo, Director of HEDERA Sustainable Solutions, a social tech company based in Berlin, providing impact data management solutions. Have on my left, Tamara Campero, investment manager at Oxfam Novib. Have Vika Bagat from FMO, Technical Assistance Officer. Agnès Dienne, CEO of VisionFund Senegal. Grégoire from Advans Group, Deputy CEO, and Meriem Sine, CEO from Advans Tunisia. I will bring you with a first introduction, and then we will have also the participation from Christophe Bochatai in charge of ESG, from Triple Jump and Technical Assistance. And then we will have a conversation with our guest speakers. Why is this topic relevant to us? I don't have to repeat what are the climate risks that the sub-Saharan Africa region is facing, but I'd like to share with you a brief picture of what our FSP is doing. We conducted a study early this year on what is happening in green inclusive finance and what are FSPs doing in terms of their climate risk management. We see activities related to risk management. Out of the 15 FSPs that were interviewed, only less than half environmental risk and are conducting environmental risk analysis of loan applications or training of staff to reduce and avoid negative environmental impact. So we see a space for more technical assistance, especially in activities as supporting clients to develop green practices and products and services to respond to environmental shocks. So one thing is about the climate risk management, and then about what are they offering in terms of fostering resilience through products. We see for household and businesses that there are offers in renewable energy and energy efficient clean cook stoves and clean drinking water, but still in very low scale. And in terms of agriculture and biodiversity, we see institutions, only 20% offering sustainable practices for crop production, energy management, soil management. Still, you see very low numbers. The question is it because the data hasn't been systematized? Is it because it's not dedicated products? Are the climate risks not aware from the financial institutions? And you may say these are not the only products that can foster resilience. We see as well payment for ecosystem services or mobile money transfers or indemnity-based insurance. And what we have as result is institutions are implementing them and increasing the demand, especially for mobile money transfers and for savings for diversification of activities, but not implementing and not plan to do it, especially financial services for migrants, a key topic that we have been discussing this week. So is it a matter of priorities or a decreasing demand, or is it mission driven from the institutions, or is it missing a strategy? And with this, I would like to launch the conversation. If you would like to see more about these results, you can explore the report on green inclusive finance in sub-Saharan Africa. We haven't yet done a full presentation on that, but here you have an opportunity to see more in detail what are the challenges of the region. So let's start with the conversation, and I'd like to invite now here from the investment perspective, what has triggered you to think about climate risk assessment and how best to support the FSPs. We will start with a project from Oxfam Novib Triple Jump supporting 2 microfinance institutions in Sub-Saharan Africa, today with VisionFund Senegal and supported by HEDERA. And here, Tamara, let's get started.
Thank you, Natalia. Well, first of all, I would like to, for the ones who don't know Oxfam Novib, so Oxfam Novib is a foundation, and next to our programs, we are also asset owners. We have funds, impact investment funds, which are managed by Triple Jump, and we have been active in the sector for almost 30 years. So why climate resilience? Climate justice and climate resilience is a key topic for the programs of Oxfam Novib. We see that climate change is exacerbating the already existing vulnerabilities. And we think that we see the microfinance institutions as a perfect vehicle. They are well placed to support the resilience of the end client. So the why is the client. The why we are doing this this support is with the client. 2 years ago, we decided to change completely the investment strategy of our funds, which was dedicated to financial inclusion, some years rural, some years agri, but we decided to reframe completely our investment strategy. And since then, we are working on poor climate resilience building. So we are aiming to support even more financial institutions working on prone areas to climate change to provide the right support to clients. So that is our why. Yeah? Our clients are focused, are central in our work. And then the next question is how? We do believe that in order to support financial institutions, to support end client, you need to provide us as asset owner fine-tuned credit lines. So in that term, we do have, for example, we know that our clients are active in prone areas, so we have a special credit line to be activated after a disaster. And this credit line is, for example, dedicated to recovery financing, and this is used to MFIs to recover us after the disaster, and also end clients to recover us after disaster. We also believe that we need to invest in innovation and the development of new products. So for that, we have another credit line called the innovation line. But access to finance or funding is not enough, and we are very aware of that. So in that sense, support our clients on climate risk assessment is core in our strategy. And we do believe that the climate risk assessments need to be more in an integral way. We see like there are several tools. The sector has been trying to do so for years, but we believe that the climate risk assessment should be more integral. So not only looking at the portfolio, which it is a main risk for MFIs, but also looking at the physical risk of the institution, and also looking at the real risk of the end client. So that is our vision of how can we support the best. So providing, on one hand, fine-tuned funding, but also supporting the climate risk management of the organizations.
Yeah, thank you, Tamara, for providing this overview and motivation. So we'll continue also to see from the perspective from FMO, now supporting the climate risk assessment of a project from Advans Group and its member institutions. Vika.
Thank you, Natalia. Is the mic working?
Yes.
Okay, great. Yes. And yeah, I think very similar to what Tamara said, for us at FMO, our aim, amongst others, is to help the base of the pyramid, to help the most vulnerable and beneficiaries. And we use financial intermediaries like microfinance institutions to reach these very hard to reach and vulnerable populations. So I think our first question was around, firstly, what motivated us as FMO, maybe even personally at my level, to look at climate risk and resilience. And I think I would like to share with you a very striking example that personally happened to me, but has happened to multiple other colleagues as well. When we go to our markets to visit our customers, we also go to see the end beneficiaries of these customers. And, in one of our recent visits, we were visiting a micro enterprise. It was a single woman who was selling, groceries at a local market. She had been diligently paying her loans back for 10 years. She had been a loyal customer, but a flood 4 years ago had made her unbankable. She's no longer eligible for loans. So that stark realization, the urgency with which climate change is eroding the gains made by the most vulnerable, is what motivates us as FMO, and personally as well me, to tackle this issue very urgently. It's one of the biggest roadblocks, I would say, at this moment to financial inclusion for the base of the pyramid. And at FMO, we look to support our customers to tackle this via multiple mechanisms. One way is indeed providing better access to financing via FMO's guarantee program, the Dutch Fund for Climate Development, where we fund climate adaptation solutions, especially in land use, for agriculture, so on and so forth. But in addition to that, we truly believe that we want to empower our existing customers in the financial sector, especially MFIs, with capacity building support and technical assistance to help them become future-proof and help them serve that most hard to reach and most crucial to reach population. So we look at providing them with capacity building support to help them understand what is climate risk, and also to embed the idea of managing climate risk throughout the organization, but also towards the end beneficiaries. I think, what is striking is that for me, capacity building for the end beneficiaries always appeared to be very important. However, we see more and more that the end beneficiaries are acutely already aware of climate change because they're being impacted by it. But I still think indeed being able to have capacity building on a holistic level is very important. And therefore, we had partnered with Advans to provide technical assistance for training and capacity building. In addition, then thereafter to do also a climate risk assessment. You cannot tackle something that you do not understand fully. The risks are crucial to understand. So that's also something together with BII, we had supported Advans with to be able to analyze risks, and I think you'll hear more about this. But finally, I think what's important and what we really strive to do is to be able to provide technical assistance to pilot products and services that actually help you tackle the risk. Because understanding the risk is not sufficient. If you understand the risk, there are strategies that may also mean that you just do not serve the most vulnerable populations. This is not what we want. This is not correct. But piloting innovative products and services that can continue to serve these populations, that can continue to amplify the impact, is where we see the real change. Thank you.
So clients are being aware of these risks, And now if clients are aware and they are coping, they have been coping mechanisms. The question is now from the microfinance institutions, what made them to do these climate risk assessments? How did you start as institutions? What have been the methodologies that you have used? And here, let's listen from VisionFund Senegal and then from Advans Group about this trigger that you had.
Thank you, Natalia. Do you hear me? It's okay? Yes. Okay. First of all, allow me to thank Oxfam Novib and Triple Jump, HEDERA, for this opportunity. So VisionFund is part of VisionFund International and World Vision, who is work with very vulnerable people. So our mission is to provide financial services to vulnerable communities, and they can build an sustainable livelihood. So, and we work in a rural area, and our portfolio is represent more than 9 of our portfolio represent livestock and agriculture. So you can imagine the effect of climate in our client activity. So in VisionFund, we put client in the center, and usually we went to the field to listen them. And after one visit in one branch, we realized that the desert gained a lot of area. So, we have 2 options, doing nothing and trying to do something. And it was a tiger who a stimulus. And I think Triple Jump come in the right time to help us to put in place this strategy. So in January, we start the journey with Triple Jump and writing our strategy. And it's something that we start. And about the methodology, we do assessment in 3 levels: portfolio level, institutional level, and client level. So, and we learn a lot of things about this. And we can have now our climate resilience, and we have a clear action plan, and we can develop, and sure we'll need support. And we realize something also, it's not enough to give loan to client. You need to help them also to face all the climate change that we right now have in the world. So if you listen to the news, you can see that in West Africa, we have a lot of floods who impacted a lot our client, and they lost a lot of crops currently. So it is how we start, and it is why we think that we really need to put something in place to help our client. Thank you.
Grégoire.
Yes, thank you very much. So very rapidly, I mean, Advans Group is present in 8 countries as a leading microfinance group, and we serve more than 1 million active clients. So yes, we've been active in trying to provide adapted and tailored financial solutions to help micro entrepreneurs grow their businesses and build their social well-being. And so by working with them since 2007, we have very much identified and I've seen the first manifestations, I would say, of climate change and the impact it has on our clients' lives and also on our operations. So we made basically 3 key observations. The first one is that, as what was said, we operate in countries which are the less polluting, but are the most exposed to climate risk, climate change, and the impact it has on the activities. The other one is we're already seeing how it exacerbates inequalities in these countries, which makes this inclusive development that we're trying to achieve altogether all the more challenging. And clearly, we're seeing the risks that this is making on the lives of our clients. So our countries where we operate are very much exposed because of course, their climate, lack of infrastructure, and high exposure and dependence on agricultural activities. So based on these observations, I would say, we started working in 2022 in tackling the question of, after focusing on economic development of our clients, social well-being, how can we be meaningful in strengthening the climate resilience of our clients? So we had this group seminar on the topic, and the first step was actually to raise the awareness of our own managers, own teams, and directors, going through I don't know if you know the French fresque du climat, which is a very good tool to raise awareness of your key staff. And then in summer 2022, Advans Pakistan, our affiliate in Pakistan, was very heavily hit by the floods in Karachi, which were clearly a very strong manifestation of climate disorder. Our operations were basically wiped out, staff, house, clients, etc. So it became all the more vibrant for Advans to implement a climate strategy with ambition and an exhaustive approach. So we have 3 key objectives: raise awareness, educate all the stakeholders with whom we operate. We consider that the entrepreneurs will be capable of being actors of the mitigation strategies and the climate resilience they need to develop, because they are informed of the climate risks and how it impacts their activities. The second objective is to help mitigate the risks as far as we can, and in some cases where relevant, try to protect our clients against these risks. And the third one, which is a longer term objective, is to contribute to the transformation of their activities so that it's more sustainable for their activities and their communities. So we developed a strategy with the help of our partners, FMO, PII, EIB, with 4 key pillars. First one, once again, is to, as an organization, understand our impact and how we can mitigate it and make our staff basically climate ambassadors within their affiliates, organizations, and with our clients. The second one is to understand how climate change is impacting the activities of our clients very concretely, and see in some rare cases where the activities of our clients is contributing to climate change. The third pillar is to build on the knowledge we've accumulated, inform, educate, alert our clients on these risks and on mitigation strategies. And the fourth pillar is to try to devise, imagine, implement innovative solutions which can contribute to the adaptation and resilience of our clients. So basically, after going around 3 pilot countries, and Mariam will tell you about Tunisia, but also in Ghana and Côte d'Ivoire, going around the management teams and the key middle managers on this awareness and education phase, we then developed an internal risk scoring tool, which enables us to have a global vision of the current exposure of our portfolio to climate risks. So this is a methodology I won't go too much in details of, but basically we're looking at the key climate hazards, which are impactful in the countries where we operate. We look at the physical risks our clients are exposed to because of their business location. This is factored by the sector in which they work. So each economic activity does not have the same exposure to a same climate hazard, depending on its location. So agricultural activities will not be impacted the same way by a flood than a restaurant or a wholesaler of goods. And anyway, so based on the factor, we look at the impact on revenues and impact of assets of each of these climate hazard. This is factored in to come with a climate score, a climate risk score for each of our clients, depending on their physical location and economic activity. So this is then aggregated in the global risk of our portfolio, and it can be distributed by branch, by sector, by season. And this gives us a way to monitor the risk of our current portfolio, how it should evolve in time based on different climate scenarios we are looking at based on the work of the United Nations. And then this enables us to maybe ground in concrete terms, what can we do about it? And this is, I think, what Miriam will tell you about more concretely.
Yeah, I see that after the climate risk assessment, you have already a full plan for implementing this climate risk awareness also within the institutions. And seeing the efforts that you have done with the institutions itself, we would like to listen to Miriam and also to Agnès, what were those key learnings that you had from the climate risk assessment? If there was something that has surprised you that you didn't know before. Now, Miriam.
Thank you. Hi, everyone. Thank you, Natalia, for the question. So the climate project was a very interesting project for all Advans Tunisia staff. So we learned a lot through this process. We learned about climate hazards. So what risks are the most imminent, what risks are expected to increase more. And we also learned about our clients. Are they aware of the impact of climate risks? Are they implementing adaptation measures to mitigate those risks? So the first learning of this study is that the global climate situation in Tunisia is not good. Unfortunately, Tunisia is heavily impacted by climate change. So we can observe that in July 2023, we registered the highest temperatures ever in Tunisia. It's the same for water reserves that decreased dramatically in the 10 last years. The second learning is that we are exposed to different climate risks, and the situation is deteriorating rapidly. So Tunisia is exposed to several climate hazards such as water scarcity, floods, wildfires, and extreme heat. But the most significant is water scarcity, and our clients are really vulnerable and exposed to this risk. So currently, 30% of our portfolio is categorized like highly vulnerable to water scarcity. And this figure is expected to reach 72% by 2030. It's the same for flash floods. So today our portfolio is exposed at 25%, and we expect the exposure at 50% by 2030. The same for wildfires. Our portfolio is exposed to 9%, and this figure is supposed to reach 30% by 2030. So our portfolio is really vulnerable, and things are going fast and worse. The third takeaway of the study is that the study shows disparities from one sector to another and from one location to another. So the most exposed sectors are cereals, vegetables, olives, and for business sector, it's perishable products. The most exposed location is the north and the northwest. The last takeaway is that not only the agriculture portfolio of Advans Tunisia is exposed, but also the business portfolio that is exposed mostly to the risk of flash floods and extreme heat. What surprised us and was unexpected is that our portfolio is highly vulnerable and that things are going very fast. So we expected some level of vulnerability, but we didn't expect that 30% of our portfolio is highly exposed. The second thing that surprised us is that even though the business portfolio is exposed, our business clients were less sensitive. and they don't really realize that they can be impacted on the short term on their businesses and revenues. And the last thing, and in a positive note, we were pleased to see how much our rural clients were aware of the situation. So some of them has already implemented innovative practices to put in place adaptation measures such as water saving techniques or crop schedule rotation. So we have to support those clients by tailored training and by specific and adapted financial products.
Yeah. Thank you, Mariam. And yes, would you like also to share?
Yes, thank you, Natalia. For VisionFund Senegal, what we learned is that we know how to put in place our strategy. We have our strategy, a clear action plan, how to follow. We now develop a KPI to follow, a plan to communicate with our stakeholder. And we have a strategy with 3 main objectives: reducing vulnerability, mitigating environmental impact, and promoting economic opportunity. So we learned that, and we learned also after the assessment that more than 9% of our portfolio is affected by extreme heat. So, and in institutional level, we do the assessment also for our infrastructure, and the risk is not very high, but major, and the high risk is in our portfolio. So what we learn also is even if we don't track in our core banking system, we're surprised to learn that some of our clients already using solar pump, for example. So we are financing without knowing that we are financing in climate like solar pump. So it's surprise. It was a surprise, and we know that we need just to track, and we will maybe arrange our core banking system, put the tools, and it is clear in our action plan that now we will track what we are doing in climate change resilience. And it's a good thing. So just to say that we are in the beginning, so we just start, and we learn a lot on this journey. Okay, thank you.
So after we have now we have already this information of the climate risk assessments, and from the investor's perspective, what are those that were also not covering or supporting the diverse financial service providers? What is the next stage that you see besides the climate risk assessment? We have already heard from Grewa about the development of a strategy with different elements and already with tools. Let's start first with Oxfam Novib, Tamara.
Thank you. I think that to us, we decided already 2 years ago to switch to climate resilience building. So what we did, first of all, we wanted to know what was happening in the region, what were the trends, what were the perception of challenges, the products, and so on. So we did this general research to learn more about what's going on. And to us, we started this path to climate resilience because we were convinced about what you was mentioning, Agnes. Climate resilience, climate change is affecting everyone, and everyone is already coping with it in certain ways. So we were aware that our clients, in the case of Senegal and clients, they are already working on ways to cope with. So that was part of the initial talk on this. So the next step, now we kind of have some proof of our theory. So there are things ongoing without us trying to support clients to bring to this topic. This is already happening. And the next step to us is also to fine-tune our support. Because we see climate change and we hope to support our clients to see climate change as a risk. Of course, there's a risk you need to measure, to mitigate, to prepare your action plans, but it's also an opportunity. And we would like to help support our clients to that path of looking the seeing, assessing, and measuring the risks to the next stage of opportunities. These risk assessments, these climate risk management plans helped us to fine-tune our support. So then when you have this information in place for us as funders, the next question is, okay, how can I better support my client? Is indeed launching the pilot of a new product the best way to move forward? Or maybe we need to spend some more time in supporting the organization on improving the physical risk management. I think that we all have had these cases of clients who lost completely all the contracts of the clients because of the flood. This kind of things. Or this information might help us also if our client is already working on physical risk, working on developing of new products. Yeah, maybe we need to focus on support the end clients with awareness, with financial literacy, with climate risk awareness. So to us, these risk assessments, the risk plans of the management plans are our tool to fine-tune even more our support.
Yeah.
Maybe just to confirm, after our study, we realized, as the client say, we know that we need to improve our way to work, but we need that you train us to more understand how it is a sustainable means that we will need and for this. But where you can support the institution, for example, for VisionFund, is to help us to train our client on this topic. And they are very interested to be trained and after to do it on their daily work. So maybe just to confirm what you are saying.
Maybe here we can learn about the experience that you have had in setting up trainings or thinking about the capacity building as next step from the climate risk assessment, if that's what you want to.
Sure.
To comment on that.
Yeah, as I mentioned earlier, I mean, this climate risk assessment was really instrumental in helping us prioritize and localize the type of message and training we want to have for our staff and for our clients. So yesterday I was taking part in listening to a panel about DFS and this human-centered approach, which is usually focused on our clients, but I think it was very key for our staff as well. If we, as I said, we have piloted the climate risk assessment in Tunisia, in Ghana, and Côte d'Ivoire. Results, of course, differ according to the country or exposure to agriculture or not, depending on the country and the portfolio. And so the question was raised on, should we do it again for Congo, Nigeria, and Cameroon, or can we just build on what was seen and learned from these quite intensive climate risk assessments that we did in order to already skip to the training and solutions piloting phase in these three countries? And the obvious answer is no. We need to go through the same exercise in these countries, of course, because you will probably have different results, but more importantly, because it does give you really concrete elements to work with your staff raise awareness on what is happening and how your operations are being exposed because your clients are exposed. And this makes all the rest much more efficient in the way you have the buy-in of the staff, and of course, the way you're going to tailor and prioritize the messages to your clients. So because we have this climate risk now for each of our clients, it gives us very concrete elements to, for example, if we want to focus on raising awareness on instant floods in Ghana, in the Accra region, well, our database will give us who is exposed to this risk in this area. And these are the people who will receive our SMS or tailored communication, or who will be invited to specific client awareness sessions on the topic, or who will be approached by some specific actions, which can be very basic on the palette. I don't know how to say in English, but you know, raising your equipment so that they're not flooded when the water raises, etc. So these are very practical implications of doing this score. And I think one other benefit is that it exposed us very rapidly on the fact that our data set was insufficient. We don't have enough data points. I talked about the physical risk. Well, today our proxy for physical risk is the attachment to a branch, which is, it's easier in Tunisia because clients have a specific address, so we can localize it on a map. But if you go to Ghana or Côte d'Ivoire, our clients for now, they don't have a GPS point, they don't have an address. So we needed, through our database, make a proxy on what area we would localize them in our model. And this today is too big. So now this has also encouraged us to collect a GPS point for each of our clients. But because we have a 150,000 client base, this is something that will be work in progress in actually renewing the data points we have on location. So I don't want to be too technical, but it's a very concrete also example of how operationally we should progress in better measuring the risk and tackling it going forward by seeing the weaknesses of our current operations, data collection, etc. So it makes us, you know, it's time we gain for the future.
Yeah. So we see the difference, so the data points that you have from the different countries, and we listened, Mariam, about the outcomes that you had. Now, from those outcomes and the data available, how has them influenced your climate strategy?
Yes. So the climate risk assessment was key to adapt our strategy. So first of all, we reviewed all the agriculture portfolio by sector, by location, and we revised the credit process for granting credit. So we reviewed the eligibility criteria. For example, we increased the client equity contribution to protect both the company and the client. We have also increased the requested amount of revenues from other activities. For example, a farmer that has cereals, he should have revenues from another activity like livestock farming. We have also strengthened our analysis tool, and by adding question about climate risks. So we also added how to mitigate those risks. For example, cereals in Tunisia is facing a risk of drought. So we advise our clients to use more fertilizers and to respect the schedule crops rotation. On another side, we put in place a new tool to collect weather data. So we are collecting temperatures and rainfall by sub-region, and this is helping us to update our strategy by region. We have also reviewed our credit process for urban clients. For example, a client that is in a flood-prone area we make sure that the client implemented the preventive measures to protect his stock and his business. Regarding the governance, we strengthened also the governance by adding climate committee. So this committee is reporting to the board, and the role of the committee is to follow training on climate subjects, to follow the climate action plan, advance carbon footprint, etc. Regarding the training, so we trained all of our staff on the climate fresk. So I don't know if you are familiar with the climate fresk, but it's a fantastic tool to become familiar with climate issues. And we also train the trainers to train the new recruits, etc. Regarding the development of new products, so our goal is to launch a new product, a new loan, an emergency complementary loan for clients who had a climate accident. So we want to support them in case of accident. We are also working on another product, is to finance clients that would like to implement the adaptation measures to protect their businesses from climate risks. We are also working on micro insurance products. So, you know, in Tunisia, our clients don't like insurance products for two reasons, because it's expensive and because they don't trust insurance companies. So we believe that we are close to our clients, we know their needs, and we are able to offer adapted, simple insurance products and cheaper, we hope, to protect our clients, their lives and their businesses. We also worked on raising awareness of clients by sharing videos on social media of clients that implemented the adaptation measures. So we shared those practices to all of our clients. Finally, we would like to raise funds, so it's a message for the audience to train our clients and help them implementing adaptation measures.
Very interesting. And as we see some learnings from implementations already of these results, like the awareness raising with the clients, the focus on training and capacity building that you have, and strengthening the risk management and product development, that you are in a stage more advanced. I think this can also be inspiring for other institutions. And perhaps if you, because we have already talked about the elements of the climate strategy, if you see some challenges, Agnes, that perhaps listening to the case of Advans, and also after 3 days that we have been talking about the future of financial inclusion, where do you see that you need more support?
Yes, I learn a lot with Advans, what they share. So I realized that we have some issue in insurance product because it's the same feeling of our clients. They don't trust in insurance company because it's expensive for them, because we are in a very rural area with the vulnerable people. So, and it is a big challenge for us, but we know that we need to put in place this kind of product. So we'll try to see how to manage to put in place an insurance accessible for them. Is the first thing. The second thing is our challenge is, as I say, to train our loan officer, because they need to understand and they can also train the client. So we need also to train our customer. Maybe we need to have, because we are just starting a champion of climate risk who can follow. And we understand something also, just starting, we need to have a commitment in the high level, in the board level. So in VisionFund, in the network, in VisionFund International, in VisionFund Senegal, it's mandatory to put in place an impact committee in the board level. So we think that with the impact committee, we will follow and have the board aware what we are doing in terms on climate strategy, and I think it is a good thing. So about funders, donors, we need technical support to train our client, to train our loan officer, and also to design a new product linked to climate change. We are just starting by solar pump, biodigester, but we need also to design a new product, and sure we need support for some by donors or technical funders.
Yeah.
Yes.
I see that those challenges that you have, I'm mentioning the support, now the question, and before we close and giving here whether an optimistic or pessimistic view, we would like to see from the investment, from an investor's perspective, what do you see that will come next in the 3-5 years, how to support FSPs, and will you think that will this be still just anecdotes of institutions? Will those numbers that we saw at the beginning increase? What is your perspective on this? We have the perspective from Triple Jump and FMO. Let's start.
Yeah, thank you. Yeah, in the coming years, I think as FMO, we intend to accelerate our efforts when it comes to climate resilience. So there will be, in the next 3 to 5 years, a more strategic approach and additional technical assistance, prioritization, as well as access to financing provided for commercializing climate adaptation solutions. We already see that we would like to have our customers do climate risk assessments and also share them widely with their end beneficiaries. So not just do them and are aware of their own risks, but are also able to explain these risks in a very tangible way to the end beneficiaries. We'll also see in the next 3 to 5 years, development of products and services that are targeted and customized to be able to reach these end beneficiaries. What we were discussing around insurance specifically, as well as contingent credit or weather derivatives. So really piloting innovative solutions, because insurance as it stands right now, actually even beyond beneficiaries uptake, in some markets we see insurers are no longer willing to insure because it's so prevalent, the risk, and so severe. So with this, we also hope to see partnerships with public funders, partnerships with blended finance mechanisms, which provide concessional funding alongside our more commercial funding to help accelerate the development of climate pilots that are able to support these customers better. We also see in the next 3 to 5 years the evolution of digital finance and digital products and solutions that can help provide, and it's to Gregor's point, around providing real-time information to those that are most at risk, but also farming that is to do with precision farming, geospatial data use, and so on and so forth. So lots coming in the next 3 to 5 years, and lots that we want to support our customers with as FMO, but a lot where there is also room for other partners. So sitting here, I think it's also a call to action to other partners in this room, to service providers to continue innovating and coming up with solutions, to our other peers in the non-commercial space to think about ways in which to collaborate with us, to blend with us, and of course to our customers at the forefront, right, to continue to innovate and serve the hardest of the hard. So yeah.
Talking about collaborations, Christoph. Or here.
Thank you. Yeah, so first of all, as Triple Jump, we're very fortunate to have Oxfam Novib as a partner, that really sort of early on identify the needs to focus on climate resilience and sort of really helped us, focus our strategy on the topic. We've, conducted a portfolio assessment on the readiness of our clients for risk assessment, and clearly there's a huge need, and we've seen by working with two institutions, VisionFund Senegal and another one in Mali, that offering technical assistance to support them on risk assessment has had really sort of almost a transformative results on them. And so we're learning a lot on how to do that. And even if the risks differ very much and are very much context specific, the approach to assessing the risk can be quite standardized. And so with Natalia, we've developed this toolkit for risk assessment that we hope to sort of roll out and distribute to other institutions and scale this program. We're fortunate to have received funding from the European Investment Bank to work with 8 other financial institutions. But yeah, the needs are great, and really I echo Vika's call to, really for partnership. We're supporting very similar and the same institutions, and I think together we can really sort of increase the number of financial institutions that get access to those.
Thank you. So we have talking about the collaborations and what come next and the future. We have 10 more minutes to discuss, to give you now the floor if you have immediate questions, or if you want to share also about your experiences in climate risk assessment or the development of climate strategy, or what challenges you have. Is there any immediate intervention? Yes. PhD.
Hey, thank you. My name is Alexandra Sanchez from PHP. I had a question, came a bit in line with what you were talking about from Advans Tunisia, when you were talking about like eligibility criteria. And I was wondering, especially the micro enterprises, they're generally more vulnerable, obviously. And as we go doing more of these risk assessments, from the high up, there's the green finance taxonomies and so on, and the trickle down all the way down. Do you feel that there's a risk that may drive them more towards the informal sector because they can't meet the criteria? They're really the most vulnerable, let's say.
So your question is about informal sector, or
No, I think it's a key question, and the answer is no. I mean, we don't want this approach to make us more restrictive in the access of financial services we're providing. Now, being informed enables us to modify our risk approach, or the type of message we can give to the clients. Maybe the opportunity we have is our loans are very short term. So even if you're considering some climate hazards, etc., we're not talking about 30 to 50-year loans, loan tenures, etc. In Tunisia, which is probably our affiliate with the longest average loan tenure, I think it's 18 months. So it gives us time to adjust and adapt with our clients. But the more we raise this awareness early on, the more we can try to factor in another element of our climate risk scoring, which is the resilience of our clients. But this can only be done on an individual approach. So because we now can ask questions during the loan appraisal based on, are you aware of these risks? How are you tackling them, etc.? It's not necessarily an information that we will use to say yes or no. It can be an information we use to maybe modify the amount, modify the duration, maybe influence the object and the way the money is used. But it's not something that should be a factor of exclusivity. That's very clear to us. It wouldn't even be good for our growth objectives, etc. Now, on a more sectoral approach, we're starting to identify some dilemmas. We talked about agriculture, etc. It has a lot to do with agricultural practices, etc. We talked about fertilizers. That's an issue in some value chains, cocoa in Côte d'Ivoire, etc. This is typically an activity on which fertilizer usage is being pushed, is probably in the short term beneficial to the revenue generation of our clients, but in the long term, with this climate lens, is an issue. So we can work on agroforestry, but this is what we have launched in Côte d'Ivoire. This will take time, and this is where we're also facing our limits of, as a financial service provider, how much should we do in terms of advice and consulting, or giving advice to our clients in the way they conduct their businesses, because if it fails, then it can also be a good enough reason not to repay the loan. So but it's not because it's complex that it's no, it's just helps us identify the key questions we need to tackle with our clients.
Maybe I can add, for eligibility criteria, the goal is to protect the client and encourage him to diversify the activities. So in case of accident, he has a minimum of revenues from another activity. For small farmers, it can be like 2 or 3 cows or something like that.
We had
Thank you very much for this interesting discussion. Wout van der Zande, I'm a graduate from Maastricht University. What I would like to hear from the panelists, there is consensus among the panel, climate change is there already in the fields where we are operating. There's perceived risk, physical risk is real as well. So in general, broadly speaking, there are either climate adaptation strategies or climate mitigation strategies. And mitigation, we talk about solar pumps as well as biodigesters, and the adaptation strategies can more are such as the building of resilient homes. I would like to hear from the panel, what do you think is the best way to go? Is it mitigation or adaptation strategies? Thank you very much.
Shall I chip in? I think, so what was said by Gregoire and what I had also mentioned earlier is that the types of end beneficiaries that we're targeting are contributing very little to global greenhouse gas emissions. They are most vulnerable. So therefore, while mitigation is important at every level for all of us, I think the impact is greater on these populations when they focus on adaptation rather than mitigation. I think there are great examples where mitigation and adaptation come hand in hand, like off-grid solar or clean cooking stoves, where, I think mitigation and adaptation makes sense. But I think if there needs to be a very focused discussion, adaptation is more important and pertinent at this moment for the populations that we serve.
I would avoid to classify, because of our technology solar, then it's immediately mitigation strategy. If you see and here is a call also for all stakeholders that are working in green inclusive finance, or if we only rely on the statistics about financing to climate mitigation has been larger than to climate adaptation, let's refresh this. A solar water pump is because it's whether you have a desert or you will have the irrigation that will enable them to be productive. when we visited, there were solar pumps that were water pumps that were with diesel, not fueled by diesel. And if they want to change, it's not because we are going to reduce all this noise and smoke that is coming from this genset, but because in long term it will be cheaper for us, and we don't have to transport the diesel. There are other logistics that they consider, and it's because of course the climate situation that they see, the solar water pumps will work better. Institution in Mali, almost half of the branches, 16 branches, are powered by solar home systems. They don't count this as a mitigation strategy. It's so hot that the electricity is not the electric utility is not able to give them electricity. So for them, it's adaptation, a method to be. It's a climate adaptation strategy in order to just continue their operations. And here we see there has been so little in climate adaptation. I think that any financial institution that has been growing in the past years, they are already doing climate adaptation. It's just a nomenclature that it has been missing, or the lack of this climate risk mapping in order to identify, are we doing the right path? I think all of us, all of the institutions that are still supporting these regions that have been hit very hard, they are already doing climate adaptation.
I could not agree more with that comment, Natalia. What we are doing with our fund, we are trying to avoid this trade-off, this segmentation. I mean, we do have a set of products to support our client, and we want to support our client on an ad hoc form. So based on the climate risk assessment and the climate risk plan, we define what is the best way to support. Are we supporting the development of a new product, a green one, or maybe a non-financial services product? To us, I don't see this difference so remarkable in the way that we are doing, in the work that we are doing. What we want to focus is on the resilience of the client. And to do so, and to be resilient, client need to, on one hand, adapt, because otherwise it's not possible, and also try to mitigate in the way that is possible the risk. So fully agreeing with your.
Thanks very much to all of you. My name is Sahana Arunkumar and I head Amarante Consulting. I wondered, I mean, all of you have great stories on how you're financing or what you're doing in your countries. I wondered if you have any insights to share on national level programs that can actually support more what you're doing, so that there is a more kind of, I don't know, knowledge building or practice or incentives for populations to actually do this without going through your route for the advice or, the change and sensitization. And it will be good if we see this as a public development, private sector initiative. And if there's anything you can share from your countries or your experience to say that there is actually a bigger momentum towards this than only relying on financing or the financial institutions. Thank you.
Well, I see a sector momentum in the sense that if you see policymakers or the roadmap that the Alliance for Financial Inclusion, it has been pushing and raising the awareness from central banks on how to promote inclusive green finance, and developing taxonomies or focusing on prevention, on promotion, on protection. There has been this awareness raising from regulators. Let's do something. If we go into multi-stakeholder projects and collaborations, so far on climate risk, we have seen only like anecdotal programs from investors coming together or MIVs offering this technical assistance. And what we heard is upcoming projects from ADA, more at regional level, inclusive financial initiative, climate financial initiative that will be coming, and here as well a call for collaborations, or SNOP offering technical assistance support for financial institutions. But yet, even in the study that we conducted with this in Sub-Saharan Africa, there was none that we saw there is a national program, nor the FSPs are aware about something that they can reach out.
Because I mean, the education sector could be a direct way to start, even when you're young. That could also be a parallel program. But yes, we don't hear too many of such.
That is a good idea. Now, multi-sectorial approaches, whether from agriculture ministeriums or from the education perspective, and in awareness raising. So.
Hi, everyone. Thank you for your session. I think it's been really insightful. One of my favorites so far for the week. So I'm from Grameen Foundation, and we've been working kind of in the solar finance space for a few years now, and we're just getting more involved with women's climate finance bonds. So I thought, Marianne, it was really interesting what you said about making climate risk assessments with your clients and then asking them to enact risk mitigation measures like climate adaptation measures on their farms before they get loans. I think that's how I understood it, is what you're saying.
Yes, and what's the question? Sorry.
I'm beginning the question.
Okay.
Yeah, so I understood that correctly, that you are asking your clients to do some climate adaptation before they can qualify for a loan.
Yes, it's not before the loan. We make sure that, for example, for olive plantation, that the clients choose the local cuttings that are more adapted to our soil. It's just an advice, but if the client decided to choose another cutting, it's okay for us. There's no limitation to grant the credit. So it's more support and to share knowledge with our clients and push them to protect themselves rather than not to finance them. Our role is to support the clients and help them protect themselves and their businesses.
Okay, yeah, I thought it was a good idea. So I was wondering, does anyone else have any examples of use cases and products that you guys have financed beyond the solar home systems and cook stoves and everything that we hear a lot about? Have there been other products that you have seen have been particularly successful with last mile rural customers?
Well, yes, there has been programs for improved cook stoves financing from Entrepreneur du Monde in Senegal. We see a case in Kenya from Fortune Credit financing multiple technologies from biodigesters, electric vehicles in transportation. We see cases from Annapurna in India combining energy and as well wash. And in sustainable agriculture, we heard also the examples yesterday from FDL in Nicaragua, who has been already with a long track record supporting their farmers. And we have actually also a map showing the cases of financial institutions offering diverse products, from solar water heaters in Peru or solar crop dryers, as well efficient fridges, and now with other funds that are coming, like the one from Incofin, the Climate Smart Finance Fund, that is addressing improved buildings, wash, sanitation, circular economy, energy. Then we will see more cases. For the mapping, you can visit the green map that is developed also from the European Microfinance Platform, from the Action Group on Green Inclusive Finance. And there, for everybody, an invitation to revise the case studies, also to participate in the upcoming trainings of the Green Index, where we will be revising exactly the products that are being offered by financial institutions, how they are addressing risks, how they are developing their climate strategy, and learn from those best practices. We're coming to the end.
To add one comment, just to say, you cannot say to your customer, you will choose these tools. You will choose solar pump. I remember on the field when I tried to explain one customer the benefit of solar pump, and she answered something very interesting. And she said to me, I just want one thing is to feed my family. And for me, I'm sure that it's not my tools is have a big impact on our planet. You know that the guys who is making a big impact is a big industry. So, and solar pump is expensive. And I'm not really have money to take it. So I just try to be in the place of the customer. So you need to train them, to expand them, and they can see the benefit in the long term. So just to add this. Okay.
To close the session, I think our main takeaway that we see here is we have been a decade. I see so many familiar faces where we have tried to bring inclusive finance to be greener. And now that we have green finance, let's make green finance more inclusive. It's a call to everybody, to those that are developing frameworks, that are developing tools, that are developing investment funds with specific conditions. Think about the customer, that it's not about whether I will choose that technology or not, if they want to feed their children. What we saw yesterday, and I don't want to see that the next climate crisis, institutions will turn their backs to the clients. That we as a sector, we're turning backs to financial institutions that are addressing the most incredible problems that we have now, nowadays. Climate is a time bomb. These are only selected institutions that have been supported. But here we have stakeholders. The impact of our decisions, of our programs, have the impact on millions of people. We have CEOs here in this round. Your work is affecting more millions of people with your programs. I think the best impact that we can have is that in 10 years, we don't exist anymore. That the microfinance sector, at some point, it will not be a microfinance sector, it's a financial sector. That everybody can have the opportunity to have financial services as anybody else, as us. So now let's aim for taking out, but not leaving that word, vulnerability and vulnerable populations. We must fight for having this green inclusive finance, that it's not anymore. It is nice to have.
Thank you.